here. Good afternoon, everybody. My name is Joseph Miranda. I'm the broker and owner of Miranda Executive Realty. Welcome again to our Ask the Broker Elite Training, the training that we do on the 1st and the 3rd of every month. This is our deep dive training where we talk about the high level stuff that a lot of other coaching companies will charge you big bucks to learn. So before we jump into it here, let's do a little housekeeping. The first thing that we want to do is our shameless plug. So if you're an agent that is not an agent of Miranda Executive Realty and you're in this meeting, or if you're watching this later on YouTube or on one of our social media channels, please feel free to scan the QR code if you want to learn more about our company and possibly schedule an appointment to see what we can do to help you grow your business. Now on to the next slide, we're going to talk about questions and answers. So Anna is okay having an interactive format, and I'll let her speak on that more in just one moment here. So I'm going to go ahead and introduce our guest speaker today. Our guest speaker is somebody that I know very well, that I've gotten to know over the past year or so. And as you know, we don't just allow anybody to come in and speak in these trainings for us. We vet them very thoroughly. It's always somebody that we have to, know very closely. We've done business with them, and we know that they meet the standards of, not only the industry, but the standards of our company and the standards of that we are trying, or that we try every day. We work every day to show in the agents out there. So we don't take it lightly when we bring a guest speaker on. The fact that we have a guest speaker here means that we believe very highly in her capabilities. I'm not going to speak too much about Anna. I know she's got a lot to share here, so I'm going to go ahead and hand it over to Anna Horuk of Next Mortgage.
Hello, everybody. Thank you so much for having me today, and I appreciate the invitation from our broker, because not only am I a mortgage professional, I also work with Miranda Executive Realty as a sales representative. So once again, my name is Anna Horuk, and I am a real estate agent with Miranda Executive Realty, as well as mortgage professional with Nexa Mortgage. It's a nationwide broker that does any type of loan that you can think of. So I am personally passionate about guiding my clients through this not a very simple journey of buying, refinancing, or what have you, getting equity out of their current residence or investment property. And I do pride myself in having that package knowledge in order to help my clients the best I possibly can. So today, Joe and I had a conversation and decided to share a little bit more information on entire mortgage and mortgage products, because not only there are so many different variations, there's so many different programs we can offer to the client. So once again, we are discovering mortgage options, not so much in depth, but at least briefly, so that you can use this knowledge to your advantage and help your buyers, maybe help them choose or learn about the really different products that they can use, even if they think that they cannot afford or buy today. And why, as realtors, do we need to know about mortgages? It's very simple. It gives us so many advantages. You don't have to dive deep into it, but you would want to know a little bit information about the market, mortgage market rates. You do see that your clients are asking you, when is the best time to buy? Not only, first of all, it gives us client retention, it opens up new opportunities for us to bring new clients to the table. Again, this is unlimited, because at some point you probably heard from your family, friends, or clients, I'm not ready to buy. My finances aren't in order, but they yet have not learned anything about possible options for them. So be prepared and equipped with some of the extras as a realtor in order to open new business opportunities for yourself and grow your business as well. You can always learn more about mortgages and help your clients, at least let them know this exists. You should go talk to a mortgage broker. Even if you're not sure, at least you'll have this path and guide. So definitely this is going to show your tailored options for your clients, because you're not just going to ask them for pre-approval as it happens oftentimes in our business. Definitely helps with negotiation skills or methods, because once you learn mortgages, you will know, oh, this HOA is not Fannie Mae approved, or this HOA does not have reserves in their budget. So that could definitely bring some of the negotiations to a different level. And again, it equips you with the skills that customers very much appreciate. Next competitive advantage, I would definitely mention professional growth. So once you start learning new options that exist in a mortgage business, how do you look like in the eyes of your customers? You look more professional, more well-versed. You learn about the options that exist out there. Absolutely professionally, you grow among others. Not only will you be able to negotiate and sell and help with the purchase for your buyers, you will be able to show them that you're really true professional in real estate, and you possess the knowledge outside of your field, which definitely poses you as having leverage among others. So I hope you will take at least key pieces of information from today's presentation and use them to your advantage and use them to grow your business. Let's move on to the next slide. There's so much information in mortgages, in the industry, in the market. But what I would like to start with, general picture of the key players in this business. You've probably heard about Freddie Fannie or Fannie Mae and Freddie Mac. These are government-sponsored enterprises that are really big in this industry. What they're doing, first of all, they're definitely playing key role in this market and in economy of our country, because not only they back the mortgages, but they also are buying mortgages from different investors. So Fannie, for example, Fannie Mae would purchase mortgages from resellers such as biggest banks in our country. Freddie Mac would purchase from local credit unions, but also they would back some of the mortgages themselves. So you will sometimes see, oh, I got a notice from my lender, and my mortgage was resold to Fannie Mae. So this is an example of what they do, and they're really, really big in this industry. Irene, can we move to the next slide? Another key player in this industry and financing overall in mortgages is what you heard about HUD, or organization that regulates and oversees different types of rules that is allowing our buyers to get an FHA mortgage. So FHA stands for Federal Housing Administration, and it definitely allows our buyers to expand their ability to purchase homes and become or obtain that home ownership. We will discuss lately about each of these organizations down the road, but it's important to know your key players and definitely understand the responsibilities or the role of each. Next, we will discuss VA mortgages. So our veterans, how do they get mortgages? Well, VA, U.S. Department of Veteran Affairs, allows them to obtain mortgages, often to 100% of financing, and people are awarded, our veterans are awarded with these mortgages, which allows them to become a homeowner and on very specific arrangements. And again, self-explanatory, VA stands for Veteran Affairs. So these are the mortgages that our veterans are awarded with and are able to use in getting into home ownership. Irene? Now we'll discuss different type of mortgages. There's so many of them. I definitely do not want you to get overwhelmed, but at least I want to show these options. Our clients have options. And for you to know your client, since you already are very in tight communication with them, knowing these types of loans will help you understand, okay, this client is saying they're not ready to purchase, or this client is saying, oh, I'm not eligible. And here you will come in with the knowledge and help your clients get to the next level, or at least start learning about their options. So we will look into types of mortgages, and there are many of them. For conventional mortgages, these are Fannie and Freddie mortgages. They allow for, these are regular mortgages that allow for lower down payments, and they tend to have requirements in terms of a credit. So good credit is preferred, but it's not required, because depending on the credit profile of the buyer or the borrower, we can still use conventional loans, even if the credit is not the greatest. They do allow for low down payments, as low as 3% in many of the programs. However, each client is evaluated differently. I'm sorry, there was a pop-up. I thought it was a question. Each client is evaluated differently, and sometimes what the client is not able, needs to raise the down payment in order to qualify for the mortgage. Nevertheless, please know that there is less than 3.5% down payment available for conventional loans. And those loans are home ready and home possible as an example. These are great loans because they help to gain that ownership. For example, home ready loans, there are grants, non-repayable grants, free money that the client or borrower can get in order to help with those closing costs or the down payment or whatever it is. There's some loans that have grants depending on average income in the area. And I believe these are great tools for your clients, because you're able to leverage other real estate agents in knowing these items in order to make the sale or help the client to move forward with the process. So again, conventional loans are very good for your regular professional or an adult professional that earns stable income and has history of employment and is able to bring at least 3% down payment to the table. Next, we'll speak about common FHA loans. There's so many FHA loans. Not everybody uses them, not everybody knows them. But for example, FHA 203 loans are one of the most common, your regular FHA loan, where the credit might not be that good, and the buyer would like to just use Federal Housing Administration products in order to finance their purchase. I will answer this question. Are home ready loans, the rates for home ready loans are not, they are higher than FHA, and I will come back to that maybe a little bit later after this slide, but I will talk about it and I will explain the difference. The first loan I mentioned is FHA, regular FHA 203 loan. Then there is a rehab loan. Also, we use energy efficiency loans with FHA. What that means, the buyer can refinance, for example, the house that they already financed, but made so much more efficient through energy inefficient appliances or some of the items that improve house to the point that it's considered energy efficient. They do get more favorable terms and are able to, in some cases, lower their payments. So this is a great benefit. Then the FHA graduate payment mortgage, that means that a professional, for example, a college student who is currently working and is expected to graduate soon and start receiving higher income. So with that loan, you'll start off with slightly lower payments, and once the person graduates, their payments will increase. And reverse mortgages. So what that means, reverse meaning, and most of the time it happens in retirees, when a retiree wants to start using the equity of their home to pay themselves. And then this equity, depends on how much equity they have, is just helping them to live better life, better quality life. And what's your opinion on the reverse mortgages? I will touch base on that just after the slide. With FHA condo loans, it's your regular condo, FHA approved condo loan. It is rare in the state of Florida just because, let me correct myself. It's rare in South Florida just because our condos are sometimes in such a conditions that they cannot be approved by FHA, but it's still possible. Some of the lenders do spot approval for conventional or FHA loan, so it's still possible. I will go back to the questions right now. So I'm not sure. Can you guys give me some feedback regarding the sound?
Sounds good. I hear you loud and clear.
So Zalman,
I hear you clear.
he's having some issues. Okay. Let's take a look at the questions. Are home ready mortgage rates higher than conventional? What is needed to qualify? So home ready, there are different types of home ready loans. There are home ready loans based on your income and home ready loans based on your geographical area. That's called special credits. So what that means, each county has specific figure for average income in that county, and there are some programs that would qualify to get a credit based on that. And the grant that I was referring to, that's Home Ready One, first-time home buyer grant. It's basically free money based on your current geographical location where you reside at this time. There are some locations that are considered low income, and if you're a first-time home buyer, you may qualify just based on the current residence for anywhere from $5,000 to $7,500 in free grants, and also an appraisal reimbursement as well as home warranty if that is offered by the seller. So in terms of rates, they are better than regular conventional rates, and I already mentioned the qualifications are really, you need to work with individual loan officer to determine your qualification. There isn't really a standard that I can look up right now and tell you, but many of my clients, first-time home buyers, do qualify for grants and some of the options that we mentioned. Next question. My opinion regarding reverse mortgages. I definitely do not I haven't formed a specific opinion, to be honest, but I think it's a great option for a person that doesn't intend to leave anything to their heirs and want to live, during their retirement to a higher standard, or want to use their equity and enjoy their life. So it really depends individually on the situation, but I think it's a great option for a person who has great great value in their house equity, so we call it. And if they want to really enjoy the rest of their lives, it's a great option, definitely. All right. I know people who were in a bad financially, and the reverse mortgage saved them. Yes, absolutely. Reverse mortgage is a payout to yourself. It's a great option for disabled people who no longer are able to give themselves extra income or don't have options to earn extra income. So everything they put into the property, it's using that to make your life better, to use it for your travel, what have you. I believe it's a great option. It's just everybody needs to understand the implications and the rules of that reverse mortgage. I often see that our buyers or borrowers of that type of financing do not fully understand what it means to take out a reverse mortgage. So if that was the case, they always get confused. Sometimes it ends up being a foreclosed property. So it really depends how well you are prepared for that and what your needs are. It's very, very situational approach, I would say. All right. So as we mentioned, FHA loans are great for people who have the down payment in terms at least 3.5% down payment. It's a great option for people whose financial credit history is not that great, but it also is slightly more demanding than a regular conventional loan, I would say. It's heavily regulated, definitely. Although it does give our clients opportunity with the weakened credit, or say if there was a bankruptcy, FHA allows for a much lower wait period after the bankruptcy has been discharged in order for the buyer to obtain this new type of financing. Each of the mortgages I mentioned earlier, conventional and FHA, do have loan amount limits by county, and I'm happy to announce that for 2025, once again, FHA and conventional loan limits have been increased. It's already published out there. It will allow more of our buyers to be able to become homeowners in the area, or with the amounts that are currently popular on market. So it's not a negative thing. It's only a positive thing, especially for us realtors, because we'll be able to offer these higher priced homes to our buyers, okay, or potential buyers. All right. VA loans and USDA loans, which is rural loans, are backed by government. What that means, the government guarantees repayment of the loans, of such loans, to the lenders. VA and USDA loans are only are valid with lenders that have been approved by proper agencies, and those lenders, it's harder to get, of course, but it allows us to serve different type of either geographical area with USDA loans, or VA loans to serve our veterans. That is also very I want to say popular in specific areas as well. I know we have at least one person on our team, I think it's Veronica, if I'm not mistaken, who is working with veterans, as far as I remember. So VA loans are great because we're able to give back to our veterans and help them become homeowners. Irene, could you help to the next slide? And I'm not sure if anybody heard about jumbo loans, what that means. And in this market is very, again, a great option. Jumbo loans conform to standard rules of Fannie, for example, and they allow us to finance higher priced properties. So I mentioned the term loan amount limits. So each of the county has a set loan limit. Counties that generally offer higher priced properties or real estate would have higher limits, but you would know that California, for example, is a state that is really high on that scale, and standard loan limits may not be sufficient for some of the buyers who want to buy a bigger house. So jumbo loans allow us to finance properties that are priced on the higher end. Or say in our area down here in South Florida, we are seeing the prices are increasing, and we have a demand for those highly priced properties, whether investment or similar. So jumbo loans are a great way to finance those properties. They do require higher down payments, and credit score or credit history requirements are higher. But this is an option that exists out there to help our clients that are wanting that higher price property or luxury property on the market. Let me go back to the question that was posted by Lisa. Okay, program where first responders are being offered no cost buy down for the first year. There are many programs. Florida, unfortunately, has very limited tons of those resources. So there are various programs, first responders, nurses, doctors programs. It really depends on the ability of the buyer to locate that bank locally that is approved by our governmental programs and local agencies to sponsor those programs or to be a part of those programs. The wait period is always high, so you might lose a house by the time you get approved, and the resources are very limited. However, personally, with the broker that I work with, I think there's only one bank approved in Broward County that does teachers loans. So we would need to look into specific title for the potential buyer in order to determine what type of loan it could be and help them through the process as well. Make sure that the bank is approved, that the bank in our network is approved. But it does exist, Lisa. So yes, if you want to learn more a little bit about that, I can definitely bring you more detailed information on a separate occasion. Now, something that I was really excited about, this is a conversation started that happened between Joe and I, is something called non-qualified mortgages or non-QM mortgages. So out of just having that title, these are the mortgages that don't fall into any of the boxes we mentioned earlier. So it's non-conforming, or it doesn't belong to a category of Fannie or Freddie, FHA or HUD, or USDA or VA groups. Those are mortgages that are often sponsored, or the finances, the resources come from private lenders. And what they do, they help clients or borrowers that do not fit in any of the boxes, giving them the chance to become homeowner. These are great for business owners that have different ways of showing earnings. And these are great depending on different types of earnings or income. So whether you get income from your assets and you just live off of that, whether you rent so many properties but have many write-offs, definitely perfect for business owners that have many write-offs. And what's great about them, yes, they do tend to run higher in terms of rates, but they don't have private mortgage insurance, which is kind of put you in the middle between lower rates and taking out a non-QM mortgage. Alternative documentation options, we're going to discuss them in the next slides, but you can use so many different documents, such as your assets or profit and loss only, or, for example, bank statements, deposits to your bank statements. So we are going to break those down in here. Each of these programs that you have that we have listed on the screen brings different type of value to the buyer. Business owner or self-employed person, meaning self-employed person that files Schedule C or does not file business taxes, they're just showing themselves as self-employed on their personal taxes. They're able to use the deposits that they earn from their self-employment practices and qualify based on average of those deposits. So it's a great option because as self-employed, you probably know yourselves as realtors, you have so many deductions and write-offs. So at the end of the year, it's hard to show adequate net income, so final figure, to qualify for standard conventional or FHA loan. So personal and business bank statements is a great way for a person who is a business owner or self-employed to get to the home ownership, because we don't review tax returns at all. Written verification of employment, what that means, we're just using that particular form to qualify, and the income listed in that form to qualify our buyers and to demonstrate that they have income stated on that form. There's nothing else we'll require in terms of tax returns. No tax returns are reviewed at all. Same goes for profit and loss statements. Amazing programs for business owners or self-employed where you don't experience constant income. So say your deposits, you cannot use personal bank statements or business bank statements because the deposits or income is not stable. When we look at personal or business bank statements, we do look at that stability of incoming cash that you derive your income from, right? With profit and loss, it's an amazing tool or program where we use profit and loss statements, sometimes even without having to show your bank statements as supporting documentation for your profit and loss, but it allows us to cover those gaps that you might have in seasonal jobs or commission or what have you. Once again, great tool to be able to qualify for a mortgage. Same goes for 1099 forms. Self-employed people are often using 1089 forms, and then they file taxes. Very similar to profit and loss. We're using those forms in order to qualify you. So it allows us to use the gross income versus having all of the deductions written off and not being able to show enough income for you to qualify. Amazing program, and it's just a tremendous assistance to self-employed buyers who want to become homeowners and qualify for that loan without having to strive or to pull their hair out and think of other ways to make money to file tax returns that would be sufficient for conventional or FHA mortgage. Now, you probably heard about debt to income coverage ratio, right? So that exists for investment properties, but guess what? There are programs that we don't look at debt to income for primary residences. So we're only identifying strong qualities of your credit profile, as well as checking the assets and reserves in order to qualify a person for purchase of primary. I think that's amazing because there's so many people who are sitting on saving to pay cash for the purchase of their home. This will bring them to their goal much, much faster because they don't really have to show income to cover their debt expenses and to cover housing expenses. Amazing program. Debt to income service ratio for investors is using collateral. So the subject property and the money that it could potentially make to the investor. So what can the house or condo can be rented out for in order to cover the mortgage payments. Last two, we don't care how many credit cards, what your balances are on credit cards in proportion to your income. It just doesn't matter. and you get to become a homeowner or an investor in these two cases. And I think these are just amazing options for either first-time home buyers or people who just want to become homeowners as well as investors. And although some of the lenders do require for investors to have some experience, there are lenders now and there are programs now that don't require you to show investment experience whatsoever. So these are the options that you have out there, and there's so many of them. I'm sure that, I hope at least, that out of this presentation, you'll get at least 1 or 2 new customers in the coming months. Let me just double check about our questions. So teacher loans are designed for teachers. So you know how unstable teaching positions are. There are a lot of substitute teachers. There are TAs, teacher assistants. So these loans help teachers qualify for some type of financing in order for them to become homeowners. So that addresses the question about what are teacher loans. All right, and then another category that I really wanted to discuss briefly, just need to watch the time, second mortgages or home equity options. What those are, everybody or some of you already probably heard HELOCs. These are our HELOC types. It means that you're dipping into equity of your home in order to fulfill your obligations, such as maybe you have large debts, which are much higher, your credit card debts, which are much higher in interest than HELOCs. So you take money out of your real estate equity that you own and use that to pay off your debts. Another option is to pay educational loans, pay them down, pay them off, or help your family or children or whatnot. Or you'd like to improve your home. Again, HELOC would be your option, because these are your funds, really. So you're just reusing them. And there are different types of HELOCs at this time. And what I'm surprised about is that alternative documentation we discussed earlier outside of normal income is becoming more and more popular in those options, especially because there are so many self-employed and people who earn out of gigs and such. So regular home equity loan would be full income review. You have to turn in your tax returns and make sure that debt to income is considered and you're still passing. Piggyback loans are very helpful for people, or especially in the state of Florida, for people who don't have enough for down payment, especially in condos. So you've heard that many condos are accepting only 25-30% down payment at this time, whether it's for reserve purposes or maybe they are undergoing some improvements and their special assessment. So piggyback loan allows you to take out concurrent loan to help you with the down payments. And it's really two processes. So you have your regular loan and piggyback. They are processed concurrently, either with the same lender or with 2 different lenders. Up to you whether you want to pick and choose, but it does exist. And the last absolutely amazing product that I wanted to take a look at is all-in-one HELOC. How many, and maybe you can drop this in the chat, how many of you heard about call to action similar to, oh, you can pay down your mortgage loan within 5 to 10 years? Can you please answer in the chat box, maybe? Who has heard this? You can pay versus 30-year or 25-year fixed mortgage, or adjustable rate mortgage. How many of you heard, oh, you can pay down your 30-year mortgage in 5 to 10-year period? None of you? Okay, I'm surprised. There's so many videos on YouTube that is stressing this option. All-in-one HELOC is when you're taking your mortgage, even if it's with very low percentage. When you're taking your mortgage and refinancing into all-in-one HELOC, what it does, it works like a credit card. Yes, it does run with really higher interest than what we even see right now on the market being regular high interest period. But what it does, you're creating your own credit card. It attaches to your earnings, but it pays down faster because every deposit that you make does not go towards paying off of the interest, but it works as a credit card. You're paying down the balance. So the calculation of principal and interest is much different than in regular loans. When you're at the beginning of your loan, you're paying down a big portion of your payment. That's interest until pretty much middle of your regular 30-year mortgage. Just to let you know, I am certified to do all-in-one HELOC as well. Not many people do them just because it's a very special program. There is a little bit of a shock with this, but think of this being as your credit card. You pay the bill, your balance drastically goes down. I think it's a great option for people who really want to tackle their mortgage versus 30 years. They want to tackle it within 5, 10 years, 15 years. It does eventually save you on mortgage interest, but it does require really strict budget management. Okay. But again, it's a great product, I believe. All right, Irene, would you please help to the next slide? I think we've covered a lot today, except for the last two, business loans and commercial loans. These are also two types, and I'm not sure how many. I'm not sure if anybody in our office, maybe Joe can help us. Do we have many business loans, commercial loans that we're doing in our office by any chance?
No, not really. And I think those are harder to get. So yeah, I actually didn't know that you do SBA or commercial loans either, because a lot of banks, they don't do them.
Okay, so it's not something that maybe it's something that we can think of. Definitely, commercial loans require a lot more asset investment, but any property that is more than 4 units is considered multi or commercial, to be exact, at least by guidelines from Landing Field. I do offer them, and just to give you maybe a little bit slight step back, I work with over 200 lenders in my brokerage. So they're commercial lenders that are amazing. They work with top banks that grant very acceptable rate to our buyers. And just know that this is something that you can offer to your clients as well. I've done multi-unit mindset, I believe, training, or I went to the meeting. And it is true, if you're buying 4 units and if you're buying 40, you will technically invest so much more time or equal amount of time to figuring out both, but you capitalize more on the more units you have, the more you capitalize on them. It's just no brainer also, but again, it depends on assets, definitely depends on the portfolio of each investor and such. And SBA loans, small business administration loans, yes, we also offer them. I've done an equipment loan, and this was a truck driver that wanted to expand out and purchase semi-trucks, so we've done that. And equipment for a beauty salon, I've done that as well. Commercial loans would also fall under a category when the person wants to purchase a unit within the building to conduct their business in. So I do that as well. So as you can see, there are so many options, and maybe you didn't explore them before, but I'm happy to, I'm definitely happy to share this information with my team, and maybe I'll open a new business opportunity for you. So hope you can take something away from this meeting. Irene, I think we have approached the end of our session, and I'm happy to take any type of questions at this time. But we designed this presentation and this piece of information for you to learn that there are so many options out there. Don't be scared to ask questions or to dive deeper into something that you would really want to excel in. Happy to guide or be your friend in that regard, or your, I wouldn't say mentor, but definitely your counselor in that regard, and help you take your business to the level that you see it, the way you see it. So if you have any questions, this is the time to address them, or actually, voice them. Yes, Lisa.
Where are the single family rates at right now, like the best rate available?
Best rate, give me a scenario, like an example, and I'll try to. So for example, single family home, 20% down payment, 760 credits, was at 6.5 in conventional this morning.
6.15?
6.5.
0.5, okay. And then it's like a, I don't know, condominium at 20% down with a 760 credit score. Where is that at?
So I can definitely price specific scenarios. State of Florida has an adjustment. Sometimes it's favorable depending on the situation. But with condo, I can definitely price this out. I didn't price it today. Price single family home, but I can definitely get back to you on this. So
okay.
Similar situation, 760, 20% down, right? Conventional, yes, or FHA?
Conventional.
Okay. Let me send you a message with that specific rate scenario.
Thank you.
Anybody else? No more questions.
Hi, I have a quick question.
Yes,
ma'am. Is it still morning? No, it's the afternoon. Good afternoon. So I have a potential customer who has expressed interest in maybe wanting to buy a home next year, but she is about to declare bankruptcy. Are there options for folks in that predicament?
So really depends what she wants to do. Is this her last option? Because I had a client of mine that I've been working for. He signed contract for new construction, so it's going to take 3 years to finish. And now he has a situation and he's like all over the place. And I'm like, is this your last option to declare bankruptcy? Because it's going to be on the credit report for a while.
Yeah.
If it's a last option, your best shot would be non-QM loan in the future, or FHA. It really depends how long the process will take for her. Really depends what type of bankruptcy, Chapter 7, Chapter 11, Chapter 13. They all have different wait period requirements when it comes to conventional and FHA loan. FHA has a little bit more leniency in that regard. It has much shorter wait period, and so does non-QM loans. So non-QM often, lenders that require you to wait just 12 months before you.
Okay.
But again,
so I'll look at it.
Credit.
Yeah. So she seems to and again she seems to be taking it she's getting a lot of different advice. So I'll look at those two options and see if I can help the conversation.
Absolutely. If we can find out what type of loan, what type of bankruptcy she's filing, it'll give me the opportunity to give you the option. This is what she can do in 12, 24, or however many months.
Perfect. Thank you.
Sure. Hi, team. Any more questions? Thank you, Carolina. All right. If there are no more questions, I'm happy to conclude our session today. I hope that you've learned something new and this will help your business to grow.
Thank you, Anna.
Thank you, everybody. Joe, maybe a last word.
Yeah, let's throw Anna's information back up on the screen here so that everybody can have a chance to copy it down if they need it. Anna, that was very informative. I appreciate you taking the time to put all of this together. I feel like I just drank out of a fire hose, and I'm sure a lot of other people do as well. So that's why we're going to put your info up so that, and you know, for the agents or anybody watching, if there's any questions on mortgages, I mean, as you can see, Anna is extremely intelligent when it comes to these things. You know, really anything real estate, she's pretty much an expert on it. So highly recommend her. Grab her information here if you don't already have it. And yeah, any other questions that you have later on, definitely feel free to reach out to her. Well, that's going to be it for this. We'll do one final shameless plug. So for the agents, sorry, Irene, I know I got you bouncing around here, but for any agents that found this highly informative and they want to learn more about us, more about mortgages, more about Anna, you can definitely reach out, scan the QR code, and schedule an appointment with us. Otherwise, this is it, and catch us in 2 weeks. Yeah, that'll be what, the 26th? We're probably doing a training. I know that's right around Thanksgiving, but we probably will. So otherwise, don't stay stuck. Reach out, guys. Thank you again so much, Anna. Thank you for everybody that showed up. It was a great training, and I feel like I know a lot more. So it was a pleasure. Thank you so much.